Good morning, everybody. It is Thursday. It is November the 2nd. It's just coming on 6 a.m. I will try and be very quick with this, but I have some very unpleasant things to say as we get to the end of this. And it's got nothing to do with what took place yesterday with the fucking Happy Gilmore. Again, FOMC, flat, 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 flat. Meeting comes out, he starts talking, and that's where you get your move. And yes, we got a plus 1% day on the S&P, plus 1.64% on the Nasdaq. Dow supported, Russell came back, almost threw up, came back. And yeah, we got a green close on an FOMC day. So, things that you don't expect can actually happen. That's kind of why we had to lay it out there and give the, hey, could happen. Now, you know what? I'll skip off that. I'll come back to it. 3 green closes in a row, 3 in a row, 3 in a row. Like I said, 3 in a row happens. Even 4 in a row happens. Happened right here back in early October. 1, 2, 3, 4 happened right after that big 104 point range Jobs Friday, which is tomorrow. Jobs Friday. So, keeping that in mind, keeping up that we have 3 green closes in a row, and more importantly, you know what? I am going to go over here before I go over there. Your futures are in fuck you overbought territory. And I'll show you it in a couple of minutes what I mean about this. This is the 1 hour, which is my bread and butter. Here's your 4 hour. Here's your 4 hour. Here's your 4 hour. Here's your 4 hour. You see your 4 hours up here in the 90s. I was talking about this yesterday with the indexes, how the indexes 4 hours were getting overbought. Consider yourselves warned. I've laid this out when we went into the weekend that, yeah, we were going to be getting a bounce. And guess what, guys? We got a bounce. We damn sure did get a bounce. And I will show you here in a minute when I clean up my charts because it's me time. Alrighty, so let's go for 3 green closes in a row, okay? 3 green closes in a row, 3 green closes in a row. We have almost filled the gap from October 24th, almost. We will be filling it when we open up, and I will give you a bigger, broader, wider picture here. This is the entire month of October, 8 days. October 17th, right down here to October 27th. 10 calendar days, 8 trading days, 10 days, very clean, down, flat, down. We have retraced 50% of that with this gap up that we have right now, which is plus 20 points over there on the ES. We will be opening above this 42.4867 at the moment, and your resistance level right here, which was from back on the other day, at 42.60 right here in front of our faces, right there. Come over onto SPY. Oh, forget it. Come over onto the VIX. That's where we're going next. VIX, rally Friday. Rally Friday. Not rally, not sell off. Rally Friday, last Friday. Here we are, selling off aggressively on the VIX, down to 16.22, not down into those levels where it's starting to say, hey guys, the VIX is way oversold. But we are down there, and you are being warned about being a little bit too much over bullish just because we've had a now 4 days. Okay, we bottomed here. Apologize. This was on October 27th. On Friday, we put in the lows. 1, 2, 3. 3 days. We have retraced half of that massive 6.6% drop. 200 and, let me get it correct. Don't want to be, I'm not understanding your jargon kind of shit. 280 289.79, not 290 points, 289.79 points on the SPX. We've recovered half of that in 3 days. VIX, already there, giving you your warning. SPY, that fake print that took place during trading hours is one of the scariest things I have ever seen. Seeing them happen after hours, always take note of it, constantly take note of it. But when that took place during the trading session, I am without a shadow of a doubt giving it a ton of respect, understanding both that we are extremely overbought in 3 days and what's coming. And what's coming ain't cool. It ain't cool, but it's coming. Like it or not, it's coming. SPY, gap up, already through the 50 retracement of the October drop. Already through the 50. To get up here, right? All the way up here, 434 would be the 50 retracement of the entire drop. So let me bring this out, and I hope I drew it the right way, which I did. I did draw it the right way. The 38.2 retracement is right up here at 428, which for me, I don't think that we're getting up to it. The 23.6 retracement of that entire drop, we are already blown through yesterday at 421. That was another reason why your 421 calls were out there for the alert, which, you know what, let's go and look at that. Because again, that was the December. So here's the QQQ 231117 call 353. $5 entries up at 927. These will be up over 100% today. Take the money if you didn't already take the money. When I threw it out there early in the week, and again, we will go over that. 231103 call 420. These were down at $1.80, I think. When I put out the alert, you're up at 462. The 421s were down at something like $1.20. You're up at 389. These are going to be even higher today with the gap up.
They see me rolling, they hating, controlling and trying to catch me riding dirty.
Retraced 50%. We're right here, right now at 425, right at that break level. So again, consider yourselves warned. QQQ, through where this sell down began, when QQQ decided on Wednesday, 1 week ago yesterday, right at the opening bell, that it was going to throw itself off the cliff. That gap has been filled. We have filled a 50 retracement, okay? Your 50 retracement of this entire October drop is already busted. We're up here at that major 360.50 level. A 50 retracement of the entire drop of the entire 2023 high down to that October low, sitting right up there at 365. Now, I know I promised that my wider view was up in the 360s, 363, 365 going into Thanksgiving. I am warning you right now to take the money. If you haven't taken it already on the calls, 3 days, you're up almost 100%. I completely suck at what I do, and I'll prove it to you that I suck. The spread yesterday, safe spread, 42.55, 42.50 was getting $1. Early in the morning, afternoon, I am not going to go out there and spend energy to go track that thing. 42.55, 42.50 is getting $1, made it to 42.45.64. Targeting 42.43, which you see around, I don't know what it is, 10 o'clock in the morning, 11 o'clock in the morning, saying that we could go to 42.43. It was very likely to get a pop to it. 25%. Well, here you go. Your email on Monday. Monday going through and, whatever, blah, blah, blah. Come on down, come on down, come on down, come on down. The trade of the week, yeah, like I said, only getting $1.80 at the time that the email went out. I see no purpose in jumping into it because I thought we would get a little bit of a dip because we had that big gap up over the weekend. We didn't get a dip, so the $1.80 never showed up again. October red, your monthly ranges, again, talking about all that. And then again, come down here on your bullish put spreads on your weight names. Google plus 122, Meta plus 298, Microsoft plus 330. Well, I'm sorry, but every single one of these, even Tesla plus 205, which it is now right at 210, 210.69. Nvidia plus 400. You got that beautiful dip down to 392 on Monday or Tuesday, whatever day it was. It's up at 433 right now. And AMD earnings. AMD earnings, I got to be clear on, because on Tuesday, threw that out, messaged it a couple of times in the chat room, just once or twice, maybe 3 or 4 times, talking about AMD because they were reporting. And at the very bottom of the email over there on Tuesday, I put out their charts. AMD, I like 1 plus 100 off of earnings. Well, unfortunately, AMD did a little bit more than that, and AMD is trading at fuck you levels up here at plus 108, almost completely recovered the entire October drop, all in the course of a day and a half, all because of earnings. What that did was it brought Nvidia back into play, and Nvidia off of that hello gap all the way down there at 392. We had that little fake print there on Monday. Here you are up at 433. Resistance. I can throw up 4-hour charts on these as well. They aren't going to help you justify staying long. Nothing is going to justify you staying long. However, you have Apple today after the close. Apple filled the gap from back there Wednesday when the entire NASDAQ decided to say, we're out of here, throw in the towel, we're selling down. That gap is filled, gone, up above that major 173.88, and we are pushing the 2022 open up here. Now, I will just give you a little reminder as to how this all works. This is your Google. Let's throw up the Google chart. This green is the Google beat earnings gap down. Meta didn't do it. Meta had your beat earnings gap down, sell down. Who else reported? Microsoft reported. How did Microsoft do? Microsoft earnings, massive move to the upside, sell down with the markets, filling this gap way up here from back on July 25 when the entire thing started. Who's another name that reported? Tesla, not a technology company. Here is your Tesla gap down. So who else do we have to look at? Oh yeah, Caterpillar, they beat earnings, excessively beat earnings. And yeah, here we are. So look, you've got Apple reporting today after the close. You have the jobs report coming out on tomorrow morning. Tomorrow morning at 9 o'clock, you're going to get a message coming out of the Middle East, which is cryptic, but they are basically notifying that they are going to have Hezbollah and Iran join into the war. It's chaos. Absolute chaos. And if you think that your 4-hour chart, being as overbought as it is going to be able to help you, it ain't. So be very, very, very cautious about your upside view. I've already gone through this, how we have broken that upside view. And be very, very, very respectable if you decide, as I am, to go shoulder to shoulder with Elongate into those November 10 QQQ trade. One last thing I will leave you with, if you are still following, is here is the QQQ spreadsheet. I go here to Yahoo Finance. I go down. I copy paste the date, the high, the low, the close. Fuck off. I come onto my spreadsheet. I go here and I hit paste. My font is not the same. I increase my font. I want it to be right justified. All of this is in the 350s, 350, 350, 350, 350. So my color coordination is with a white background and a blue font. Now, I have just looked at these numbers 3 times in a row. Now, because I know that plus 1%, minus 1%, plus 2%, minus 2% is going to be an automatic calculation based on the close from the previous day. Right there, 356.96. I know where my plus 1% is at 360.53. I know where my minus 1% is. I know where all my other ones are. Because we went plus 1% here yesterday, I can copy and paste this and put it right there. Very simple. That we were up plus 1.9% yesterday. The QQQ, the only index in the United States of America that is green, is up 32.87%. The S&P is green. The S&P, I'll show you in a second. As I copy paste my gap range open, close, 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 and I get to see that we have 4 green closes in a row on the QQQ. S&P is up 9.98% on the year. We are green for the month, obviously, because it's the first day of the month. We have 3 green closes in a row. Dress conservatively about your exposure to the downside, but be very well aware 9 a.m. tomorrow morning, right after the jobs report, with last month's jobs report being that 23-point gap down and suddenly rallied right off of that double bottom there at the beginning of October. And that's because the charts were ready for a bounce. You remember it very clearly. We are not ready for a bounce this week. No, 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 no. So enjoy yourselves. Enjoy Thursday. Enjoy everything about Thursday. Have fun eating the rest of the trick-or-treat candy that you stole from your neighbors while your neighbors stole the candy from you. And enjoy the fresh air that you've put in your tires, because crude oil is on its way at the moment down below 80, and you might be able to drive to a state somewhere near you and be able to get gasoline for under $3. Enjoy your day.